Jeremy Delk joins me here today. You can learn what he's up to by heading over to jeremydelk.com. And I'm going to have that as a clickable link in the show notes. We're going to dive into this whole world of entrepreneurship.
Yeah. No, thanks for having me, Jack. Excited to be here.
So, we always kind of spend just a brief moment on everybody's origin story, you
Yeah.
know, and I'm sure you've told this story a billion times, but I think what is especially interesting is that you started doing some day trading as a teenager,
Yeah.
actually moved to Fidelity. How did that early experience shape your entrepreneurial mindset? Great.
Yeah. I mean, I've definitely said a lot. I grew up in a small town. You're in Fargo. I don't know, actually, your population may be bigger. Mine was called Bardstown, Kentucky. So it's like the bourbon capital of the world, 30,000 people. So super small. And as I was growing up, I always had this kind of yearning to want to do more, see more, and be more. And to me, probably uncultured. That was New York City, right? Like that's where like everything happened. My last name is Delk, as you said. The only thing I knew about New York was the mafia. I didn't have enough vowels in my name to be in the mob. So the only next thing was Wall Street. So I got an inheritance from my father who passed away when I was 7, like $30,000. And I started day trading. So at 17, I started reading Investor Business Daily, Wall Street Journal. And my mom was always supportive and probably shouldn't have let me do it, but I started trading my own account in high school. And by college, I took that 30 grand and grew it to $2 million. So before your audience thinks I'm very smart, it's smart is one thing. Luck is also a good thing as well. So this was in the late 90s of the bull rush and the dot-com era, completely self-taught, but I was trading naked, if anyone knows what that means. So I had no hedge, no cover calls, stop losses, nothing. And I was also levering it up with margin. So that was a big lesson in and of itself. In the moment, it was the second worst thing that's ever happened to me. The first being my dad passing away. Today, I would tell you that it's one of the top 3 things that's ever happened to me in my life, because I wrote this in my book, which Forbes like said top 3 business books of 2024. Without a plan. That's how I've lived. I've just kind of taken these steps, not ever knowing exactly how I'm going to get there, and truly not even knowing where I'm going, but just like putting my sight out on this horizon, kind of just going into that. So after I lost that $2 million, you go through the typical grieving process. I'm a victim. I'm the worst, bad luck, I hate all these things. And then quickly you realize, it took me about 4 or 5 days to realize that I didn't have a backup plan. I was walking a tightrope with no net, and my mom couldn't bail me out. So I had one of 2 options, right? Pack it in and drop out of college and move back with my mom, which would have been an okay story. Like I went to the big city, lost my money, made some money, but it wasn't going to be mine. Odd job to odd job, actually. And that experience is what got me in the door at Fidelity. And I ended up taking a full-time job at 20. I got my license right before my 21st birthday, the youngest trader in Fidelity history. I finished college. I went to night school and finished. I was working in Boston and then into New York, hence the book called Without a Plan. Since then, it's been 25 years of venture capital investing, but it's been this windy road that if you were to set out on that path, it would make no sense. But hindsight, looking back, it's just building blocks, right? We are all products of our environment and experiences. So I thrive in failure. I'm a big guy about failing fast. That's where the learning happens. The other piece it's given me the confidence from pulling yourself out to keep taking those chances and keep moving forward. Humans innately are pretty intelligent beings, right? And we have a tendency to self-protect, right? We don't think about and like to think about all the bad things. And you think about going to a funeral and death, all these pieces. You grieve, you go through it, and then you kind of block that out. And I'm not one to look in the rearview mirror, but you got to sometimes take that glance back to remember where you came from, because that is what gave me the courage to start Delk Enterprises 25 years ago, right? I was working on Wall Street, living in New York City, making a lot of money, but I had the foresight mixed with a little naivete and cockiness that I wasn't happy because we weren't creating anything. And I found out that, now I know, but then I had these inquiries, like I had all this curiosity. I wanted to learn and experience new things. And in corporate America, That's the opposite. Like you need to conform and kind of think narrow. So that $2 million loss was the catalyst because I kind of did a back of the envelope number and said, hey, is there a world where I go out on my own and lose $2 million in 4 days? And there wasn't, right? So if I already had gotten through that and survived it, I could always go back to Wall Street and get another gig. So very long-winded origin story, and then tied in the Wall Street piece for you. But yeah, that's how I got my start.
You said you lost that $2 million and it kind of pushed you into the corporate world.
Mhm.
There had to have been a moment where, you did that back of the napkin math to determine like the worst case scenario here is essentially what I'm hearing. However, there's this safety net, or at least it's a perceived safety net with the corporate world.
Mhm.
Like, was there outside of the back of the napkin math, there must have been something else that just kind of drove you to there's a
Um,
better way.
yeah, look, I think right now it's a ton of clarity, right? I truly think, I mean, for anyone that's listening, I mean, I don't believe all entrepreneurs. I don't think everyone can be an entrepreneur. I don't. I think you are or you aren't. You can learn and get better, but I think you have to have this innate bit of craziness to do what we all do. But corporate America, and there's nothing wrong with that world, but it's a drug that they sell you that is got all the things that you talk about, all the safety, perceived stability. But dude, it's not stable. Like Ford Motor Company back. I mean, like there's all kinds of things that kind of
Well, Microsoft just announced like 7,000 layoffs this week again.
right. I think truly for me, it was I've already had loss, so it couldn't be that bad. But also the timing was right. So I had no wife, I had no kids. I ran across a guy that we did a lot of business with, and he was probably in his 40s. And he told me like one day, like, I don't deserve to have any money in the bank until I'm at least 30. And I thought that, man, that's a pretty dick thing to say, right? Like, come on, man. Like, you should help me out. And he's like, no, he's like, you need to risk everything, right? Always. Because until you're, and Gary Vee talks about this all the time, like 30, 40, you're still such a baby. You got so much time, but you should risk it all. Throw it in, take bets, fail. Because now I got, 3.5 kids on the way, right? I've got like wives and houses and all this stuff. Got a lot of people counting on me, hundreds of employees, all that stuff. So you can't be as brash and brazen as you could in that early age. But those early formative years is where you really can kind of learn and shape it.
How many people do you think actually take it as a lesson, learn from it, adapt, and continue forward?
I mean, I think we live in a society now that, and it starts at such a young age with participation trophies and this. I mean, the moment you realize, and that's why I think people like me, I'm a big lens guy, whether that's, and I love real estate. I'm an entrepreneur. I have big links, but I always am into real estate. So I love real estate. But people like me who have come from effectively nothing without a backup plan will always beat someone that has a backup plan because failure was not an option. Going home was not an option. My mom would have taken me, but I wouldn't have taken. I wouldn't have accepted that. Now it's the scary part because now later in your life, you find yourself creating these impossible situations to simulate that because you actually perform better, which is kind of, you got to catch yourself on doing that. But I don't think many people do. But for your listeners, and when you're going through, like, the best advice is when you are like, it's a lawsuit, I can't make payroll. Like when you're at that depth of like, it's over, what do I do? And like the pain is so hard. Like you need to remember that every one of us has been at that moment. The difference, the people that make it and don't are the ones that either give in or push through. So think of that. And I'm sure I speak on stage a lot. Anyone that's had a biggest breakthrough in their business, I always raise the hands like, hey, who had a big breakthrough the last 3 years? And hands always go, there's someone's had it. Tell me what was happening 3 to 6 months before that breakthrough. Most of the time, it was a fucking dumpster fire. Most of the time, it was something. Netflix was trying to exit to Blockbuster, fell through. You don't get DVDs in the mail, but they're doing okay, right? So if you have and again, to me, it was probably naivete. Now it's confidence because I'd pulled it off for 25 years. But that's the piece I think you need to, it's all about the questions that you ask. And we ask ourselves the wrong questions. Every time you hear these young entrepreneurs are coming through, like, what if it doesn't work? The question is, what if it does? Right? What if it
Mhm.
does and you don't take that step? What have you cost yourself, your family?
You mentioned that, especially in the real estate world, maybe it's an oddball situation, but a lot of people treat this as like a side hustle or a hobby at best, instead of actually taking a moment, doing the math, and maybe even planning things out a little bit and treating it like a business. Do you see that in your world?
Yeah, and I do. So I'll kind of give you a deal I just did. I'm in Lexington, Kentucky. COVID happened everywhere. I don't think anyone was
Mhm.
insulated from COVID. So you see office buildings declining, right? That just occupancy, rents, all that's kind of going through. So there's a building in my town, downtown, across from the most expensive real estate in Lexington, the most expensive. And there was a building for sale for 3 years, 9-story building listed for 7 million. They were marketing it as an office building. So we underwrote it as an office building. It sold for $6 million in 83. I paid 5.1 million for it. So $80 a square foot. You couldn't buy the lot of the steel for that. 18 months later, we've done $19 million in residential and commercial sales out of it. Like, more importantly, we spent $0 on advertising. We spent really high end renderings. I've got a good social media presence. We have yet to finish a condo that wasn't sold. We've not had any inventory. Everything is off of plan. This happens in Miami, New York. It could happen in Fargo, North Dakota. No one has done it. I'm not special. Commercial to residential happens everywhere. There's 200 of them in New York City right now. I'm not the smartest guy. I'm a hick from Kentucky, right? But you look at it. And then, like, the cool thing about that project is, like, it was 50% occupied, which to me was great. Anyone as an investor, it was horrible. Occupancy is horrible. Me, I'm getting $45,000 a month to carry debt service, P&I, while I've got a vacant floor that I can fit up and sell condos for liquidity. A year after we bought the building, just off of renderings and illusion, we basically paid $700,000 for the per floor. I sold not even a white box, a still shell, gutted, for 1.4 million. I increased the value of the property 100% in 12 months by doing nothing but sharing and telling my story and my vision of what it will be. The illusion becomes real when you deliver and have these closings. Those deals, again, there wasn't anything secret about it. It was on the market. It wasn't like, oh, this is Jeremy's uncle and he sold in the building. No, I mean, and I bought it from a law firm. It was probably the hardest deal I ever bought because these guys were insurance defense attorneys, the worst to deal with. 5 partners. I ended up getting the building on a 3-2 vote to sell. 2 of them didn't even want to sell to me. So none of these are hard. It took me 6 months to buy the thing, right? But
Yeah.
that's where it is. You got to look at these things in a different lens, in a different perspective. My plan was to carry this for 5 years. I was going to sell 5 condos for $4 million, then do another floor, then a lease expired. Today, we just closed the last small unit. It's the highest residential per square foot transaction in the state of Kentucky. So I'm not smart. I just look at things at a different perspective. We just bought 66 townhouses. It was a rental play. It made no sense because it was a $14 million transaction. When you get to that level, you know this, right? You're doing house flips, whatever. But when you start to get these bigger deal levels, you're dealing with institutional money where they just have to deploy it. So their cap rate, they don't need to make sense. So that deal made no sense as a rental. It 3.3% cash on cash return. However, we paid with closing costs 191 a door. They appraise at 220. So we're making $1 million and change on the buy. We'll exit that for about $20 million. We'll make $6 million on that inside of 18 months
Hmm.
with 3 million down. So you're doubling your money plus appreciation, plus depreciation, all the different things. So those are flips, but you can also, I'm keeping some of the commercial space at that condo building downtown. That's going to be a great NOI as well. So you've got capital appreciation, liquidity, profit, plus cash flow. So these are the types of things that you want to look at because, I don't care if you're a full-time real estate guy, which I'm a Q rep. I'm sure you are as well. But even though I've done this for 25 years, I don't believe that I can keep doing it. Right. So I always have a big liquidity event. And as soon as it's coming, I'll just show this for fun for you. Even sometimes before I do the deal, I've spent the money, right? And I throw it into a real estate asset that's going to give me cash flow or appreciation or what have you. I'm not showing this to brag. A lot of people talk theory on the internet. So like if you can kind of see on this, let's see here. So this is showing you September 2nd, 2.5 million goes in, 2.5 goes out. So yeah, pretty cool.
Going back to your commercial property turnover, you're turning it into residential. I keep thinking that somebody is going to find some key of disruption there because, like you said, after COVID in my market, there are these ridiculous amount of commercial buildings that are just vacant right now. And I frankly just don't see them ever coming back to the way they were, or at least used in the way they were.
I don't think I think it comes back with a different piece. I don't know if it's co-working or what, because and there's challenges, right? I mean, there's like, I gave you the highlight reel of this project. I did $1 million worth of steel balconies on the outside. So it's hard to do. It's not easy, but nothing is easy. You're flipping 7 houses. 2 of them are probably layups. I guarantee you have one that you're like, Jesus, I knew I shouldn't have bought. I mean, that's just life, right? It's not all easy,
Yep.
but in the end, that's how work goes. That's how the process goes. So, looking at them under that component of like, okay, what's the highest and best use? And that's just real estate. What's the highest and best use for this piece? And then kind of going through. And sometimes it's hybrid. I do think we're going to move more into this live, work, play environment, right? And, Fargo, you probably have a lot more land than we have even in Lexington, but this urban sprawl is still kind of running out. So the density is where it's going to go. That's one. Two, I know you said you guys do a lot of multifamily. I mean, there's some smart people that are doing that, right? I mean, look at, BlackRock and these big institutions that are just buying houses because the demographic of like, I don't know how old you are, I'm 45, but like the American dream isn't really, I don't know if it's even ever was really real or employed just kind of get people mortgages, but like this upcoming generation are experience-based living, and they're getting served markets do that. Now, I think there's companies now you can sign a year lease with a company and move wherever you want to kind of go in different cities. I mean, it's like the flexibility and autonomy, you have to serve that future population.
Just to remind everybody, if you found some value in what we're talking about so far, you should head over to Jeremy's website, and that's jeremydelk.com. There's going to be a clickable link in the show notes. The only way this show grows is if you share this with one of your investor friends. So I'm asking you to please do that, as well as if you're watching us on YouTube, give us a quick like and subscribe. So can you talk a little bit about Delk Enterprises then? What is your core business and how are you diversifying your portfolio right now?
I'm a venture capital guy. That's what Delk is. We invest in industry agnostic things. So everything from building materials to manufacturing. Last 10 or 12 years has been a lot of healthcare. We had some pharmacy businesses. We had 2 Inc. 500 companies. So we've taken companies public, private. So just like any VC, 100 winners and 1,000 losers, but the 100 have paid for the 1,000. But again, the diversity piece, I think that's the component that I'm kind of talking through is that very few people have built wealth by being diversified. You usually create wealth in a very specific niche, right? Sell this. And then, I think real estate is a great preserver of wealth, for generations, great for taxes pieces. So when COVID happens and 3 businesses go up, 3 businesses go down, that's the kind of diversity that you get.
So how do you mentioned a few of these things. Let's focus on the real estate aspect, of course, because this is a real estate investing podcast. When you saw this property that you converted to residential, like how do you run the numbers? How did you see the opportunity where everybody else missed it?
Well, I wanted to do And this is the important component of like, that's why I title my books Without a Plan, is that you don't always have to have it figured out. But I knew I wanted to do something. So I thought I had this great idea. It turns out, usually any idea you had, if you Google it, someone's probably already thought of it. So the challenge with, you know, big projects, right? You got 7 houses, but you can ping off 1 or 2 and grab liquidity. The problem with these big projects where you put in 10, 20, $30 million into something, historically, it's a big carry. It's a big burn. I mean, it's a lot of stuff to kind of go through. And then, let's say it's a hotel. I invest in hotels too. I've got one in the Caribbean. The exit on those is getting longer, right? So you don't have a lot. So the idea, I wanted a hospitality component. I wanted a hotel because we were under hoteled in this piece, but I like the liquidity. So Airbnb is doing this in Miami. The Airbnb actually has a venture fund where they will buy and partner with developers on condo projects, and they are purpose-built condos meant to be Airbnbs, right? For like short-term rentals. So that was the original thesis. Like, hey, I think that I would like to own this. I think people would like to live in it and have the flexibility, or investors would like to kind of go through. So that was the original thesis. I was going to build my own. And then when I couldn't find the right dirt and I had some challenges with that, I just started looking at different ones. Like, hey, I know they do conversions. What about that? And then you start penciling it, and it made all the sense in the world because I had real leases from real tenants, like at a bank and a big law firm for 30 years. So like really good credit that you could leverage off of, right? So you take that to the bank, like, hey, who's going to pay me? Well, these guys are going to pay you. I'm not going to pay you. So like now you leverage that. And like, I know you know that world, but when you can leverage OPM, other people's money or credit to kind of go through that, it helps out liquidity quite a bit. And you can go through and choose like, hey, I want to sell these 2, I want to keep those. And then you've got a ready pool thing, because selling $800,000 condos is a lot easier than $30 million buildings.
So you've been talking a little bit about taking some action or kind of relying on your gut. Can you talk a little bit about like, how do you balance that where you take a moment and follow the plan?
I'm an action guy over planning all the time. I trust myself that I don't believe anything happens to me. I think it happens for me. I've just done it. And it's hard. Mindset is tricky. Even though I know I still have negative thoughts, I can feel bad about myself, and I still have that. But the quickly you can understand that none of that shit's productive or actually helps you solve the problem, the better. So I take action and just push through, and I don't have it all figured out. And things change. We had a 5-year horizon on this deal. It's going to be 2 years, but I was just going to have a rooftop pool and some amenities. Now I'm putting a $4 million restaurant and a spa in, right? No way in a pro forma, didn't budget for that, didn't tell the bank about that, nothing. But we hit this vein where there's a niche that I think it will work, right? Because we're monetize the building and it kind of works through. So I can either find a tenant or have an operating business. For me as a business guy, I do like operating businesses and know a little bit about it and have a lot of shared services. I've got legal and marketing. I've got a lot of stuff that most restaurateurs or spa people wouldn't have. So it's easier for me to leverage those components, but just go. And I think the other piece is, it took me probably 10 years to figure this out. The mistake I see so many entrepreneurs making is, oh, well, you're doing these house flips, right? You're here on this podcast, Jack, right? There was probably a point where you being on site every day and kind of going through was like better. And it took you some time to walk away from that, because if you're not there, it won't get done right. But what's also true is that you're never going to scale or fucking go anywhere, right? So the quicker you can realize what you like to do and what you don't like to do, what you're good at and what you're not good at. Do the stuff you like and good at. The other stuff, get someone better than you, that's smarter, that likes that stuff, that does not like it, likes it and is good at it, right? That's how you get leverage. And that's how you get scale.
You have quite a vast portfolio. You've talked about rental properties, restaurants, pharmaceuticals. It's quite a diverse portfolio there. We've been told for most of our life that there's riches in the niches and you should focus on one thing, but you've kind of bucked that trend unless you started
Now,
with a
so
focus and then
that's 100% right. So that's the challenge, is like people, because I do a lot of business coaching and even like personal development coaching and stuff. And like people see my Instagram and where at my lake house or my beach house or my hotel, and they see all this stuff. But dude, I'm an overnight success, 25 years of the making, right? So like that's the thing that you can't, like I did this, like when I started Delk Enterprises, I made $6,000 my first year in business. My rent on my Chelsea apartment was 5,500. Any mathematicians out there know that doesn't pencil, right? But I had some cash to kind of go through it. Like I exited the business. I knew it was coming in. I negotiated a hotel deal for 3-4 months because I had these things up time, and then lined up the closings, and then boom. So always taking the cash off and throwing into, throw a lot into real estate, into businesses, venture businesses as well. But preserving some to throw it into either trophy assets, things you like to visit, to kind of bring off either appreciation and income is the strategy. But when I'm in those businesses, I like to create that 0 to 1 approach, right? So that's what's fun for me. And then once it gets to a certain level, it's profitable, maybe $5 to $10 million in revenue profitable, then I'll bring in management because I'll break it. Like, cause I like to fix this. So I'll purposely break it. So it's better to have, someone else to go and just scale. Scaling is easy. Just execute plan. I enjoy what I do more. And then you let the adults run them.
So those people that are possibly diving in and being an entrepreneur themselves, what skills or habits should they try to form now to help with the future success?
So I turned down 600 million for a business, ended up getting like a ton of regulatory issues, paid millions in fines, and sold the business for like $7 million when you had 600. That time, which was like 5 years ago, and 20 years ago, I lost that 2 million. I was unteachable. I knew everything. And when you start being that way, look out, because Tyson's coming and you're about to catch a right hook, right? Always be willing to learn. There's always another level. I've got billionaire friends, billionaire partners. They're no different than you and I, but always be willing to learn, listen to perspective, and have that willingness and openness to go through. The moment you get cocky and think you have it all figured out, buckle up, buddy, because it's coming. Like,
yeah, when Tyson says you can have all the plans in the world until you get punched in the face, is that something like that? So you mentioned your friends there. Did you find it valuable to be around individuals where you wanted to be? Like
100%. Like the whole idea of like your network is your net worth, all that. Not even because like we don't even do business together. No, it's just like you have a comfort in like we probably friends because I don't need anything from them and vice versa. So it's just like the experiences, like, or like I'm getting off the helicopter and I got Michael Douglas right in front of me in Monaco for the Grand Prix last year. And like there's always a level. So once you think I'm so successful and made it, dude, I've never felt poorer than Monaco on Grand Prix weekends, right? I mean, there's just so much infinite wealth that's out there. But yeah, it's just that drive going through. And it also humbles you. Like, cool. Oh, I think I got it. Well, this guy's doing it a little bit more. And again, it's not even a jealousy thing. It's like, let's go. And it's possible because you know him and you're buddies and you had beers with him. He's not anything more special than you. He's just executing on a higher level. Everyone says, that first million's the hardest. 100% true, because it's like a unicorn, especially from people like me that's never seen it. 10 grand, much less $1 million, right? That is like, it's really just getting to it. It's giving you the validation that you deserve it. And that, okay, I achieved that. And then the next million or 10 or 50, 100, it's just a numbers thing. They're just zeros.
It's interesting you bring that up because it's one of those things that we've just so self-imposed regarding when you said, some of us haven't even seen 10,000, let alone 1 million. I think it was Dan Martell or somebody who said that you only get paid what you believe you're worth.
100%. 100%. Yeah, and you heard the old story about the watch, right? The watch or the car. I think it was the watch. And, have you heard the story?
No.
So a grandfather had this old rusty kind of watch and basically gave it to his son and said, hey, why don't you try and sell this? I don't know anything about this watch. I wouldn't know where to sell it. He's like, oh, well, I don't know, just go try a jewelry store. So he goes to the jewelry store. It's dirty. We only sell new stuff, not going through. No worries. I'll give you $50 for it. Okay, well, where else can you sell it? How about a pawn shop? Maybe a pawn shop goes to a pawn shop, and pawn shop looks at it. It's still scrappy, but it's gold. Looks the weight. And he's gonna give him $300 for it in gold. He's like, okay, cool. Take it to this antique shop. Antique shop gave him $10,000 for it. It was an antique Patek Philippe pocket watch. You know, if you feel like you're undervalued because you're in the wrong environment, right? So it's the same logic, right? If you're not valued, if you're not valued in the Senate, doesn't mean that you're not valuable. You're just in the wrong environment.
Well, Jeremy, this has just been such a fantastic conversation. You mentioned your book. Where would they find that?
Yeah, books on Barnes and Noble, Amazon, anywhere you can find books. And there's audiobooks on Audible as well. And yeah, I mean, check it out. The reviews are like Wolf of Wall Street meets The Hangover, but it's a whiny tear. And I got really vulnerable and I tell the personal stuff because we talked about all these highlights and Inc. 500 and all that. Dude, I didn't get here from wins, man. I got here from losses. So, look at it as a badge of honor. Failing is more than 95% of the population that never tried. So have the courage to keep going. Take a step. Maybe you're not as crazy as me that need to leave a high paying Wall Street job, but take a step. Ask the Rotamaria, make the hire, do the new product launch, whatever it is, just take that step. You won't regret it.
Yeah, it is kind of one of the recurring things on this show is everybody seems to have a phoenix rising from the ashes type of story. Like
Yeah.
everybody is, and many of them, especially successful ones, see it as lessons or another form of investment. They've been there, done that, and they adapt and make the next better move. Well, I really appreciate this, Jeremy. Again, it's jeremydelk.com. That's going to be a clickable link in the show notes. But if you're ready, Jeremy, we'll close out the show with our rapid fire questions.
Yes.
What lie do real estate investors often tell themselves?
What lie do real estate investors always tell themselves? That's a good one. I think, and I'm guilty of this too, of, getting too optimistic and only looking at like the upside of it, right? Like you got to be realistic. Like the deal I just told you about, the 18 months was a massive success. I didn't model it that way, right? Even though I was hopeful, I modeled it on a 5-year with a 6-year kind of balloon stretching out, right? So, don't be scared, but be pragmatic as well. And don't lie to yourself because that's when you can get into a bad situation.
If you could go back in time and give your younger self a piece of advice, what would it be?
I think because I got started early, but just I think get out of your own head. No one cares about you. And that's a really hard thing to say. But obviously your wife, your mother, your kids care about you. But so much of just like you don't value what unless you think your value, like you mentioned Martell. People oftentimes are so scared of failing, not because of the actual failure. It's because what are people going to think? What's they're going to say? And that's the lesson. No one fucking cares. We all have our own problems, right? Like I don't like Jack. I hear a story about you and your 7 flips didn't work out. God forbid. That's unfortunate. It doesn't affect me. It doesn't change my life, right? It's cool. I don't think any more or less of you, Jack. We put these narratives out like, oh my gosh, what are they going to think? And it's just BS. No one cares. Keep going, and learn. Look at it from that perspective of, everything's a learning experience and it's happening to you. Don't be a victim.
Do you have a book recommendation?
Great book recommendation. It's a friend of mine. Get mine too, please. But it's called Die with Zero. Bill Perkins, you know him?
I have heard his.
Yeah. So I met him. We have a couple places in the Caribbean. So I met him on Branson's Island in Necker, and he's very successful energy trader, entrepreneur, investor as well. And it's just this whole different framework because I had this very extensive estate planning workshop and all these different things worked out for my kids that I was only incentivizing them. Like if they made $1 million, the trust would match their $1 million and what have you. And I remember I was on a yacht FaceTiming Bill on my 41st birthday. And I was telling him like so proud. And he's like, you're a fucking idiot. I'm like, cool, man. Thanks. Appreciate that. That's awesome. And he's like, dude, you're an idiot. He's like, what you just described may be great for your son. Maybe your son. He said, but what about if your daughter, right? What if your daughter wants to be a poet? Like your job as a parent is, you know, maximum happiness for your children. So let them be what they want to be. Let them be they may not take over Dunkin' and Rise, whatever. So the idea with Zero is, you know, use money now. If you want to donate to charity, don't wait till you die. Give it to charity now. If you want to give your kids your money for a house or this, give it to them now. You don't have to have all the paperwork because you're there to help advise them. Take the trip, do that. And like, that's the whole idea. You can't save your way out of death, and just look at that as, you know, he calls them memory dividends. And how much you got left when you're at the end, none of it fucking matters. The ride and the trip, where you went and who you went with and who you took with you.
Sure. What single strategy or tool have you implemented that has had the biggest time-saving impact to you or your business?
This is actually a good layout. I wish I knew the answer already, but jeremydelk.com/one-page plan. It's literally a single page plan that I built every one of my businesses off of, including public exit to 500 companies. This one-page plan, we call it the one-page plan because it is on one page, but you've heard the analogy of like, hey, let's get everyone on the same page. So it's really a great tool that goes from a macro 365-year planning tool down to a monthly action plan, like a board meeting, to weekly stand-ups, to daily individual meetings.
Sure. Oh, well, that sounds like a great resource. And I'm going to direct everybody again. And that was jeremydelk.com/one page.
Yep. One-page plan.
One page plan. So Jeremy, I really appreciate your time. This was fantastic. Let me know if there's any time you could come back again sometime. Great.
I'd love to. Great. Thanks.